Hi, everyone. Welcome to the Biz Dev Podcast, the podcast about developing your business. I'm David Baxter, your host, joined as usual by Gary Voigt. How you doing, man? Hey, I was wondering.
Doing pretty good. Yeah.
How is your chia pet farm going?
You weren't supposed to talk about that.
Are they growing well?
Yeah, but we're not announcing
You
that
said that was
until,
public knowledge.
Okay, I might be the only one that can't grow chia pets. So I'm having a little bit of a problem. Didn't want to bring it up yet.
You have a problem performing? Is that what I'm hearing?
No, the chia pets do.
Oh, okay. Just want to make that clear. More importantly, we have Ali Nichols with us, who is the co-founder of Getaway, which of course we're going to ask her all about. How are you, Ali?
I'm fantastic. Thank you guys so much for having me.
Hey, glad you're here. So I'm going to dive in and give me the 30K. What is Getaway? Because I have so many questions.
Yeah, so Getaway is a real estate investing platform really geared towards helping individual real estate investors, so think you and I buying our own portfolios, scale faster. And the way we do that is we offer lots of different tooling to help source and find opportunities. We offer a really unique financing product, which allows our customers to only put in 5 to 10% down versus the traditional 25 to 30% as you're scaling a investment portfolio. And then we provide ongoing management services to really be able to manage properties across multiple states and geos and things like that as you grow from 2 to 10 to 20 to 50 doors.
So these are residential typically or commercial or what?
Yeah, so we're really focused on small multifamily units. So think 2 to 20 door types of units. So everything from a duplex to a 20 unit garden type deal.
Okay, cool. So are these things, not that I'm buying to live in, this is for me to own
Investment.
and have other people live in.
And rent, yep.
And rent out. And so if I am doing that and I'm only putting 5 to 10% down, I still have to have a pretty decent amount of capital up front, but then I'm taking on a mortgage of some sort using you guys, right?
Yep. So you're partnering with us. We have a co-investment model, which is our investment alongside of you. And then we also partner with a more traditional mortgage lender to bring a significant amount to the deal.
Okay. So when you say you're a co-investor, what does that mean? I put 5 to 10% down. You put 5 to 10% down, and you guys we own it together?
Yeah. So we are actually bringing anywhere from 5 to, in some cases, 20% of the deal for our investors. And then we own it together until you're able to either refinance or buy us out of the deal, which is our goal. And we want you to do that within 5 years. So it's like we co-invest together for that first 5-year period. You hopefully refinance us out, own that property 100% ongoing, and can continue to scale your portfolio much faster.
In larger complexes or whatever, you take on multiple investors that you partner with, or is it just a one-on-one?
It's usually an individual relationship. So okay. Sometimes our customers are buying, they've formed a group with friends or family members and things like that. So we'll partner, but it's very much a one-to-one relationship versus many to one. And then David, you were asking, what if you can't buy me out?
Yeah. So you say it's 5 years. That's what you want me to. And I can't for whatever reason, good reasons, bad reasons, whatever.
Yeah. So we've built in some protections in this world of, it's a down market on year 5. You're able to extend up to 8 years as one safety net. And then the other thing to do at a certain point would be, let's put the property back on the fair market and pull out as much equity as we can to repay everyone in the most downside scenario.
So, I mean, there's a lot of risk on you guys too, right? So right now we've been in this insane real estate market for a while. It will crash. My dad he was a custom home builder for 40 plus years. So I watched that crazy roller coaster many times, right? He'd have amazing years and then boom, nothing. And then amazing years and then nothing. So how do you guys deal with that? If there's a 2-3 year slump, or 2008 where it's a lot longer than that, how do you guys not just get owned?
Yeah. So we because we're focused, our customer is a real estate investor. At the end of the day, people are like, oh, right now the big storyline and headline and things we're experiencing are high interest rates. Our core customer is interest rate agnostic as long as the deal pencils, and we're underwriting everything or determining what to buy all based on the cash flows of the property or the expected rental income of that property. So we're very much looking at every investment decision as how can this do in month one? And if it makes sense in month one and can cash flow today and cover all of the financing costs, even at a higher interest rate, that's an investment that our customers want to be in because they do see a longer time horizon where there's going to be an opportunity to refinance potentially into a lower rate. So like we're going after a very specific part of the market that is a little bit more insulated from, let's say, a primary home buyer, which is basically like dead in the water right now. No one's buying or selling if they don't have to. But our folks are just always looking for an opportunity. If the numbers make sense, they'll move.
Okay. So I think that gives me an idea of what you guys do. Now I'm curious, how did you get into this? Where did this idea come from?
It's a great question. So I previously was at a different real estate startup. I had the honor of working there for 5 years and really helping build that company from its earliest stages to a pretty late stage startup. And what we had ended up transitioning, so it really had started around tech-enabled property management. Company was the core business model initially, and we transitioned that into becoming a tech-enabled operator for institutional capital to go out and buy single-family rentals. So this like last 10 years has been really, really exciting in the single-family rental space. A lot of institutional capital, a lot of big guys have decided that that's an asset class that is worth going after. So we basically built all of the technology, all of the operation processes, teams, to go out and deploy close to $1 billion of capital into that asset class. And it was my dream job in a lot of ways. Like if you can't tell now, I'm a real estate nerd. But at the end of the day, I looked around at me building my own portfolio, my friends and their struggles with real estate. I was like, I don't know if I want to build for a hedge fund right now. And so I got obsessed with this idea of how can I help more individuals and like normal people become real estate investors. And I have this strong belief that the American dream is shifting away from buying your primary home and actually building a mini real estate empire. There's so many folks and all of our customers, their goals are all the same. By the time I'm 50, I want to own X amount of doors that I can live off of that passive income and not worry about continuing to work a W-2 job. And so I just became obsessed with like, how can I help people do that and do that faster?
So, okay, I'm going to put on my Dave Ramsey hat for a minute because I'm a big fan of his, right? I've said that before. So I have a friend who owns a lot of property. Mm-hmm. And he makes a lot of money each month off of that property. However, he still has millions, literally millions of dollars in mortgages. So if in the classic Dave Ramsey story, if you've ever heard him tell his story, he was in the very same situation. He had at 25 years old or whatever, this forever ago, but he had like $6 million in properties. The banks got spooked for whatever reason, had nothing to do with him, but they all called his loan and it all started dominoing out.
Yep.
And that's where I'm like, my friend, I'm like, dude, you're in Dave Ramsey's position exactly. Where yes, the money is great and you're making cash flow, but any moment that domino could start and then you're in a really rough spot. So are your customers in that similar kind of vein, or are they paying it? Obviously not paying in cash or they wouldn't need you. So yeah. How does that work? I mean, where that you're not, is there any protection on that? Or that's just, if this is your lifestyle, you're that person who wants to be 50 and have 35 doors that they can live off of, you're floating some serious risk, no?
Yeah, I think the biggest thing is is what is your strategy and how long is it going to take you to get there? Like the customers that we support, everybody has a very long-term view on holding the real estate. And with that means that they're, building up equity, paying off their loans as they go. And so they're, it's the question, the age old question of like, how much leverage is appropriate for somebody to use, and like, where do we go? The thing that we found for our segment and our customer in the market is once you buy, like if you own your primary home, you buy an investment property, you basically will not be able to get financing again from a traditional bank. Now, is that right?
I own my own home outright, and then I buy an
not
investment.
outright.
Okay, I have a mortgage on 2 properties.
If you have a mortgage on a primary home, yeah, and then the third one's like nearly impossible. The fourth one, like get out of town. So like
makes sense.
But if I'm somebody with half of a network and a little bit of wherewithal, I can go out and get commercial financing all day long. I can go raise a little bit of capital from my network and do this all day long. But that gap is not bridged for, like, I call it a real estate entrepreneur, the individual investor that's trying to do that might not want to do a syndicate or doesn't have a network to go raise capital from and so forth. So a lot of what we're building is like, how do we bridge what's available and what's happening in the commercial financing market and give those tools to folks that are really trying to bridge themselves out of mom and pop investor and into the next level, which I call like a small, medium-sized business, an SMB type investor. And like, we're providing the toolkit to do so.
So you guys, for lack of a better term, are providing a workaround so a normal person who can be an accredited investor?
Not accredited. Okay. That's like a different definition in that sense. More so around access to the financial products that exist in a commercial market, a commercial real estate market, which I can go be a sponsor on a project. I don't need to be accredited to do that and get access to commercial financing.
Okay. So, and correct me if I'm wrong, the definition of an accredited investor is someone of individual wealth, and basically the powers that be, the government, whatever regulators, kind of say, you know what you're doing, you're rich. If you want to be stupid, you can be stupid.
You can take a risk. Yeah. If you make over $200K a year for the last 2 years, the government doesn't care how you spend your money.
Which is
or have $1 million net worth. That's not your primary home.
So do you guys, are you the bank when you're working with me? I want to use your product to buy a product, because I'm guessing I'm not even seeing this house. You're saying, hey, this is a good property, right? I've got a pile of properties and you're trying to find buyers for them. I'm assuming you're involved in that.
So we do source deals for our customers, especially just right now as like the financing costs are so expensive. Our product doesn't work with everything. So we're always sourcing opportunities to share that are pre-vetted and pre-qualified. But if you found a deal or you negotiated something off market, you could come to us with that opportunity and our team would happily underwrite it and provide feedback if it's something we could work together on.
Okay. This is so interesting. I have to say, I think this is, and Gary, correct me if I'm wrong, but I don't think I've ever heard a startup in this realm. So this is very fascinating.
No, we've interviewed a guy who had a startup on the other side, the construction part of new homes and development. But this is interesting because it's more of the investing side in larger communities.
I am always fascinated by how startups, you've been around. I looked at your LinkedIn. This is a little over a year-ish. So how was your first year? We call this the first year always sucks. Or at least in my experience. It's hard, right?
The way the housing market has been recently, it had to be tough.
It's interesting when so my co-founder and I became obsessed with this idea of like, okay, how do we help more and more people own real estate, invest in real estate? And we actually approached the business model from a different angle. And right out the gate. And so our first year was going through the trials and tribulations of trying to go 0 to 1 on a business model that we then found out didn't have that many legs. And like we didn't have product market fit. And so being able to then also like look at ourselves in the mirror and be like, okay, it's time to actually listen to our customers and figure out a problem we can help them solve versus like trying to push something that we're excited about down people's throats. So the first year was had a lot of ups and downs, to say the least.
Did you ever make your resume again?
No,
Okay.
I have
I
not.
find that to be when you've really hit low, right? Is when you're
Yeah,
like, this may not make it. I better go brush up my resume and get a real job, right?
yeah,
I did
yeah,
that. I'll flat out tell you, I did that. It was right at a year, and I didn't think we were going to make it. And I was busting out and I hadn't done a resume in like a decade. And so that was a super humbling experience. Like,
yeah,
just to be like, well, you suck at this. Time to go get a job that someone else brings in the money, right? Because that's the difference, I think, between a startup founder, entrepreneur, and a normal person, for lack of a better term, is normal people work where other people bring them the stuff. They kill it, drag it back to the cave. Even if you're a sales guy, your job is not to keep the business afloat. Your job is to kill something and drag it back to the cave, but not to kill everything, right? And when you're the entrepreneur, you're it, at least for a very long time. And that pressure has to sit on you. And that's a scary thing. And so eventually that pressure, I knew a guy who he owned his own, he was a doctor, very, very specialized cardiologist, but he had his own practice for 20 years. And he was like, I decided to go work for someone else and just leave that pressure behind. I don't have to go find patients anymore. They just come to me
yeah.
and I take care of them. Right. And I totally get that. Even though, I would love for someone just to give me sales. That'd be lovely, but it's tough. Right. So you guys did a big pivot, and that pivot is working, or are you still figuring that out?
It is. It's really working. We have incredible demand right now, and it feels good that our customers are coming back and saying like, "Hey, I want to work with you." Like, "Hey, let's follow up on this. Let's get this done." So that's been a really really big shift. So then it's like, okay, how do we figure out all the operational processes and like build our product and technology to scale it faster so we can service more people? That's like really where our focus is right now.
So would you consider your company a technology company or a real estate company?
So we like to consider ourselves in the fintech space,
Okay.
where we are building, you know, a lot of, and I would say we're hugging fintech and PropTech at the same time, but we're building a lot of product and tech, specifically like on the real estate side, on the sourcing and underwriting of opportunities, and then underwriting of customers, and then all of the efficiency of actually running a pretty hairy process end to end. We're trying to build all our own internal rails.
And how are you guys doing your technology? Are you building that in-house? You got buddies? How's that working?
Yeah, so we have an engineering team in house. They're fantastic. Big shout out to the guys. They're all guys right now, but to the guys on the
Sure.
engineering team.
It's tough to break that barrier. I try
Yeah.
all the time. Yep. Very cool. Very cool. So you start with an idea. Like, walk me through that process. You had a co-founder, because you're a co-founder. I saw
Hmm.
that. You're not
Yeah.
the founder. So what is your role, and I think you said he was a he. What is
Yeah.
his role?
So I'm the CEO. I run the business. Basically everything business related, where we're going, how we're going to get there, all that fun stuff. And then he is my technical counterpart and helps turn everything into a reality in our product, and is absolutely phenomenal. I feel very lucky.
So he's a CTO type.
Yep.
Perfect. And so he's in charge of getting the engineers, bringing the nerds, and getting them to do what they need to do.
We're all nerds on our team, but yes.
Are you technical at all, or is that scary?
Um,
Yeah, that's fair.
no, it's not scary. I'm not. I'm you know know my way around well enough, but definitely it's nice to have a counterpart.
Overture. Yeah. Um, okay. So you guys got together, you had this idea. How did you guys know each other? One of the things I find interesting, and here's why I'm asking this question. I talk to lots of startups. I mentor a lot through one of the colleges here, and a lot of them are businessy people, which I would classify you as,
For sure.
who probably, and you sound like you're more technical than some, but most people are clueless when it comes to, I've got an idea and it's going to need software, and I'm scared to death because I have no idea how to do any of that. And
Yeah.
so you will see them. I'll give you my left kidney if I can find a CTO. And so you have one. How did that happen? Because that's a rarity.
So we were super fortunate. We actually worked together before,
Okay.
and hit it off. We were kind of inseparable in similar types of capacities before. And it was fitting. I always joke, I'm like, we actually never talked about starting something together. Like, we never said, hey, like, do you want to start a company together? We just organically started working on ideas on the weekends. And then all of a sudden, like, got obsessed with one. And, we started doing some demand testing and felt like there were legs there, and then just kept going. So it was really, really natural.
And so you guys are together. Is he building the product initially, your first idea that didn't go anywhere?
Yeah, so we've been team effort all the way around, but same core tech team has built everything along the way.
So so now you're coming to the point of my many questions. How did you afford that?
So we were fortunate. We raised venture capital funding right away.
Oh, wow. So you had an idea with no product and got real money, like not angel, few thousand here, few thousand there. Like you're hiring 4 devs, or I think you said, I don't know where 4 came from. Several devs, a few. That's expensive, right? I should know.
Yeah.
It's expensive. Devs are not cheap. And you hired them all. You got enough money. How did that come to be? That's a rare path. Normally you got to have a product first.
Yeah. So partially it was 2022. So the world had not blown up yet.
Yeah.
The world had not blown up yet. No, I don't mean to put myself down, but we were super fortunate. Both my co-founder and I, we had worked together. We've both been at super, fast-paced scaling startups that had some notoriety in the market at the time, and we're able to leverage our connections that we've met through being at those companies, and our friends that have also gone out and started or were in VC, to kind of get connected to the right people. And yeah, we just went out and basically fundraised on our own reputation and our idea, and turned out to be successful.
That's amazing. That reminds me, early on in the podcast, we were talking to a guy, and he wanted to build, he had this dream of a product, and it was huge, pretty massive scope. And I flat out asked him, how did you afford to build this? He goes, well, I sold a company and put 16 million of my own dollars into it. I'm like, well, that'll do it.
That will do it.
That's a good way to do it.
Struggle.
And I'm like, whoa. Yeah.
Good for him.
That's a different world than I understand. But those people exist. I always like you see the news of Biz Stone and those kinds of guys. Biz Stone was one of the founders of Twitter originally, right? He's done many. And he's the kind of guy who can just have an idea, put a stake out, and just money attaches to it. It's like, and he can just do that. And then, of course, there are much smaller. And it sounds like you guys had enough that you were able to pull off some of that yourselves, which is a pretty rare thing. So big congrats on that. Most of our clients are desperate for money, and they have to do some pretty crazy stuff to get it. And so it's pretty amazing that you guys were able to do. So are you still on that runway, or are you okay? And when do you get scared again? When does runway run out, and when do you have to be self-supporting? Year, 2 years?
Yeah, we're super fortunate. We're close to still that 2-year mark.
Nice.
So we're feeling very, very fortunate right now. I'm still trying to make every cent count, because I will tell you, the funding markets are now brutal. I made that joke that 2022 was much different than 2023, but it's
it was
like
stupid money.
It couldn't be polar opposite right now. So every VC I talk to, every, round table thing I go to or networking event, everybody's like, I hope you have at least 18 months of runway, like weather the storm. That's like been the advice.
Well, yeah, I mean, and that's clearly, I mean, even in the startup mentoring space, that's the drum that are beating. It's a rough market out there. The stupid money is gone, where the stock market was kind of boring and the bond market was non-existent. So rich people wanted to get crazy, and that's where crypto came from, right? That's what I mean. When people have too much money, you start to see some really weird stuff. Crypto being a great example, NFTs being the best example of just what? Anyway, yeah. Don't get me started.
And I live in Miami, so I'm in like the epicenter of it all.
Yeah, I was going to ask if you had some of that like crypto investment guys trying to hone into your business.
It's so funny. It was like so wild down here for a minute, and now it's gone very, very quiet. Haven't heard
people started going to jail.
Or disassociating themselves.
Yeah, just
from the people that are going to jail. Yeah.
Yeah.
But it's interesting because it's not that they're gone. Not really. A lot of those people just switched and now it's AI. Now, I truly believe AI is a much better technology. I mean, not that blockchain is bad in and of itself, but that's not what people are making money off of. AI is a neat technology and all sorts of amazing stuff will potentially come out of it, I think. But those crypto bros,
yeah, it's got the same energy when it comes to like social promotion and stuff like that.
Yeah, how to prompt AI and all this crazy stuff. I mean, they're still out there selling their snake oil.
All the like Twitter threads. Like.
Yeah, it's not Twitter anymore. I don't know if you know this. It's X now.
Oh, sorry.
Yeah, it's important to keep that straight. Anyone want to take predictions on how long that lasts? So, anyway,
it doesn't matter because you look up Twitter, you still get to Twitter. It's not X yet.
Well, and is it a tweet? Is it still a tweet? Isn't it X?
Technically a post. Officially, it is a post. Okay. You post and repost on X. Tweets are dead. They're dead to Elon. So
thank you.
Rebel against it.
Clarifying that for me.
Yes. Public service announcement. Because this should be a note to all startup founders. What you want to do is you want to build 15 years of brand recognition, and that's worldwide and probably one of the most famous logos on the planet, and then just throw it out. Just totally throw it out overnight. That's
over a bruised ego.
What you should do.
Yeah.
Over. It wasn't your idea, so I'm just going to throw the bird out and throw literally billions of dollars of goodwill out the window. I think Coca-Cola should follow up with that. They should just toss it.
They'll make it XX.
That's right. It's Cola X. That's it. They're going to get rid of it. Sorry. See, Gary warned you, tangents. Here they are.
I love it.
It happens.
Some might actually make it into the edit though, so we'll try to keep
if they're funny enough, they do.
Yeah.
This part right here that we're talking, this will totally get cut, just so you know. Whenever we go super meta, it totally gets cut. Anyway.
Oh, that's another company. Eesh.
Oh, Meta, yeah.
You know what's so interesting about Meta? And again, I'm going to go on a tangent here for a second. Whether it makes it or not, I'll let the powers that be. Meta announced their Instagram Reels, I think, makes more money than TikTok does by a lot. And what you basically Meta has figured out is when it comes to the conversation, TikTok wins all day. When it comes to the cultural impact, everyone talks about TikTok. No one talks about Instagram Reels. However, Meta knows how to make money. They know how to make a lot of money. They can just turn that spigot on and bam, billions come down. It's amazing.
If you think about it too, it's like Instagram is still geared more towards millennials. Millennials have more money than Gen Z. So advertisers want to be in front of the people with the money. And this is coming from someone who lights advertising dollars on fire on Facebook. So
the users of Instagram will rant and rave all day about how it sucks and it's just so full of ads and blah, blah, blah. Yet they're still posting nonstop and still looking at it nonstop. So
and shopping off their stories nonstop.
Yeah. When you get that one slide of like 15 images that are directly geared for you and you just start sliding through them and then go to the store, as soon as you press that shop now button, money. Yeah. So
Instagram, I don't use Instagram anymore. I find social media to be it's the ultimate time waster. And so I try to stay away from it because you'll look down and then you look up, an hour is gone. But I will say, when I was using Instagram, I have never been so impressed by an ad algorithm in my life. Every product they'd show me, I was like, yes, I need that. Just, they had me hook, line, and sinker. Just every gizmo and doodad.
Yeah, some impulse.
Valentine's Day would come up. I'm buying junk from my wife.
Yeah.
Man, they were masterful. Anyway, so you mentioned Facebook, and I want to ask this. So it's been a year. You're finding traction. You mentioned that you are burning money on Facebook. Is that where your audience is? That makes sense because Facebook trends older, right? My wife is on Facebook. I am not, and she is not a young spring chicken anymore.
So Christy, edit that out.
She's
hey, it is what it is. We embrace it. I'm 45. I embrace it. It's fine. I have no hair, otherwise it would be gray. But Facebook is where our people live. Then my kids live, we don't allow them to have TikTok. So they live in Snapchat, and then millennials, like you're saying, they live in Instagram. So you're saying we burn money on Facebook. Are you
when I say Facebook, it's Facebook, Instagram. Like it's one umbrella, and Meta. I should say Meta.
The metaverse, yeah. Nice.
The metaverse.
Well done. So how's that working for you? Is it successful?
It's really successful. Back to your point of how well they are at targeting, specifically when it comes to folks that are really interested in real estate investing. Like Meta knows who you are based on the content you consume. So for us to get in front of that audience is super helpful and fruitful. And I would say, of all of the advertising platforms, by far the strongest for a payoff perspective, like dollar in versus dollar out.
I can tell you for sure that when I freelanced, I had a lot of clients that were realtors and involved in real estate one way or another, advertising. And I even have family members that are brokers and realtors, and Facebook, the Meta advertising platform, is the best source for them in every way. Yeah. Just business to business to customer, finding customers, just posting anything they post on MLS, always double it up into Facebook. Even their own websites lag behind the Facebook.
For sure.
Like advertisements, for sure.
And what's crazy to me too, so for our space is like, you call it 20 years ago, there'd be like local real estate investing groups and people would meet up and talk about their deals and have a community. Well, now that's gone all digital, and it shockingly, like, it still lives on Facebook. There's a little bit on Reddit, but that can get a little funky because people go crazy there. But hands down, like yeah, exactly. Hands down, Facebook has the strongest like group. I'm interested in investing in short-term rentals, multifamily, this market. I'm a female investor. I'm investing in college housing. Like whatever you're looking for, it exists on there. So really, really great platform for our customers.
And then they connect groups with other groups. So it's not just connecting people and individuals based on your algorithms. Yeah. That spider web spreads fast.
It's really cool. The other one I like is big for us is Bigger Pockets. Have you guys heard of that?
Mm-mm.
Okay. No.
Okay. I'm gonna give a shout out to Bigger Pockets. I'm not affiliated with Bigger Pockets at all, but it is an online community of 2 million real estate investors, individual people. They call themselves like do-it-yourselfers. And it is one of the strongest online communities I've ever experienced for a specific topic. People are so active and like all over it in terms of sharing tips, tricks, vendors, everything.
Nope, I haven't heard of that. I should tell my friend I was telling you about earlier about that one. I bet he's probably already knows.
I'm sure if he owns that many properties, he knows of Bigger Pockets.
Well, you guys mentioned knowing who you are, and I'm dating the podcast, but did you hear about Walmart and Ozempic? Have you heard about this?
I know about Ozempic. What's the Walmart tie?
So Ozempic, for those who don't know, is the miracle weight loss drug that is currently sweeping the planet. And Walmart came out with a study that showed that people who take Ozempic order less groceries. And they just said that like kind of casually. But then you're like, how did you know that? Wait a minute. Oh, you're not. How do you know what drugs I'm taking? Well, it's easy. They have pharmacies. But now this little casual thing that they mentioned just in passing has turned into kind of this little burning, smoldering kind of issue, because that
HIPAA.
means they say we've anonymized the data, but it's pharmacy stuff is super sensitive, and they're basically feeding it, and now it changes how they sell to you and how people buy because they know what drugs you buy, which is like, wow. Anyway, talk about knowing you. Yeah, they know you real deep. So careful there.
Yeah.
And I mean, they all, and I've said this before, if you ever want to know the most evil companies when it comes to who knows you the best, it's your phone company. They sell your data constantly and you have no idea and you can't stop them. So that's fun. So we're going to bring it back around here. What do you see as success for you guys, say in 5-10 years? What does that look like for you? How big do you get? Are you unicorns? Dreaming, right? Let's dream.
Yeah.
Are you a unicorn? And that means $1 billion or more. Or is that not where you want to be? Like, is that a dream you have to be a massive company? Or, okay, she's nodding. All right.
Definitely. Yes. We definitely, I believe the market is huge, that we're going after. It's a very underserved market right now. And so the opportunity is really there to build something amazing and big. I think for us, it will be adding more and more products, to get there, but we have a pretty clear roadmap of what we want to do, and think it's definitely possible.
What is your geographical reach right now?
Yeah, so right now, just given where the cost of capital is and like basically like where real estate makes sense for our investors, it's very much focused on the Midwest and then some parts of the Southeast.
Okay.
So places where rents are still growing and strong, but the entry point to the owning the real estate is much less than, call it like, that's California or the Northeast or even Florida.
Do you see you're a unicorn? We're casting forward, or you're on your way to becoming a unicorn.
Yeah.
Are you still the CEO?
Ooh, that's a good question. I will always do what's best for the business. 100%.
Ooh,
I don't have
very nice.
I don't what? No, I'm serious. I don't
She's
have
good
an
at
ego
politics
about
too.
it. Yeah, like
politics too.
I don't have an ego about it. I think, there's some founders that are like, I could never give away my baby. And I'm like, no, I want to turn this into something real. And if there's someone better than me to do that at that point in time, like, let's have a conversation about it. I hope that I can always be involved.
Sure.
But I'm very, very realistic that I'm not always going to be the best at everything.
Is this, and tell me if I'm overshooting or pinpointing it, whatever. Is this what you dream of being when you're a young person, so 20, 30 years from now, is this where you are? Or are you, is there something else you want to do?
Yeah, I will always be in the real estate space, like 100%. Now, what that exactly looks like, I can't tell you for sure right now, but I love the space. I really love our customers, and I love helping them achieve their goals. And so that's like really what's motivating me right now. But this space is just like, I get it. I love it. I want to keep doing it forever.
I mean, the passion, I think, is I always have yellow flags, and not as opposed to red flags. When I hear a founder tell me, I'm going to sell this in 5 years, I'm really looking to Google, right? This is a common thing 5-10 years ago. Google's going to buy me, right? Now they don't do that quite as much, but that was the goal. And I'm like, dude, you are not going to last until you get that check based off of that dream. If that passion isn't what's boiling in you, and I can see it in you, which I think is lovely, to that passion to keep going when things get rough like they were that first year. Those ups and downs are real, and they're scary, and they happen to everyone. I don't care how good you are. And it doesn't mean you're bad. I think that's the other thing a lot of people get confused about. But that passion that you clearly have, I think is very cool. And I think it's very neat to see. So I always like to see, because I'm fascinated by when people decide this is as far as I can take this company. So I'm going to do this, whatever this is, and let someone else take it to that next stage. We interviewed a guy who, the founder of the company, sold it to him. He was an employee after 20 years. And the guy had this idea that 20 years was as long as I needed to be into this company. I'm going to go do something else. He was like early 50s. I'm going to go do something else. I was like, that's very interesting. Like it was a timeline for him. That was enough time. I'm moving on. It made me think, I'm 10 years into my company. And I'm like, I don't think I'm going to be done in 10 years, but we'll see. Right. It's like, who knows? But anyway.
Did he do something similar or something completely different?
Total exact. They were competitors. They are competitors. That's on the podcast. We interviewed him a few weeks ago, and he's a competitor, like 50 miles away from me. And that to me,
competitor
I love
to us
that.
Is
to big picture.
I think she was asking, what did the founder do after he gave up?
Oh, strangely enough, no, he went totally random direction. Like clearly he had a passion for this other thing, which had nothing to do with his original business.
Yeah.
Which is lovely. Sorry. Yeah. I misunderstood the question, but no, they did not compete. He was just off on his own. Took his big paycheck and did something totally random, which is lovely. Maybe that'll be me and my coffee shop idea someday.
Well, Ali, there's one thing we ask every guest that we have on the podcast. What are your 3 pieces of advice for any entrepreneur, new business, or startup?
Oh, gosh. Number 1 is definitely and we talked about this a little bit earlier, but the days that you want to give up, give yourself a time period. Say, I'm going to come back to this in 3 days, because in 3 days, you're going to feel better. There's so many times where you could be so down in the dump, but if you give yourself time to process, you can pop out of it. So don't give up in that sense. The second one is more of a personal one where, and I haven't always been good about this, but creating some separation and space for your family specifically, and your significant other and things like that. Because what I've learned in the last just over a year is your startup will take everything it can from you all the time. So you have to be responsible at creating a little bit of separation to keep your relationships healthy. And then the final one is kind of corny, but you're doing this for a reason. Believe in yourself, give yourself the grace that you got this, because it's so easy to be negative towards yourself all the time, but also remembering to give your own self a pat on the butt, because no one else will do it for you when you're working for yourself.
Those are 3 unique pieces of advice. No, not really. I mean, I'm just happy that we didn't get any kind of cliche, social media entrepreneurial advice answers with hustle hard, blah, blah, blah.
Yeah. Screw that.
No, those were actually quite unique. Appreciate that.
The most important one is the time for your family, because you're going to be a really unhappy person if you let it take over your whole life.
And I could say just when I was a freelancer before I became part of Big Pixel, not on the same scale as running a business where you're responsible for other people's money, but just in the same sense that, if you're the only one doing your job and you're literally working from your home close to your equipment, and it's hard to tear yourself away from that enough. So yeah, I agree. It's definitely good to carve out some space for other people around you, especially family.
Well, thank you so much for joining us. This has been a whole lot of fun talking to you today.
Thank you guys so much. This has been a blast.
Now, Ali, if anybody wants to learn more about you paused for too long.
Fine. Whatever. You do it. Just wrap it up. I'm out of here.
And Ali, if anybody wants to learn more about you or your business, how can they get in touch, or how can they reach you?
Yeah. So best way to learn about the business is just check us out at getaway.co. It's just .co. And then if you want to connect with me, the best way is on LinkedIn. It's under Ali Nichols and it's ALI.
We'll put
So you'll
those
find
links
me.
in the show notes too.
Awesome. Awesome. Thank you guys so much.
Absolutely.
Thanks for joining us today.
All right, everybody. We will see you all next week. Have a good one.
Hi, I'm Christy Pronto, Content Marketing Director here at Big Pixel. Thank you for listening to this episode of the BizDev Podcast. We'd love to hear from you. Shoot us an email, hello@thebigpixel.net. The BizDev Podcast is produced and presented by Big Pixel. See you next week. Until then, follow us on Instagram, Twitter, Facebook, Threads, YouTube, and LinkedIn.